Well, good morning, class, and welcome back to Financial Accounting and Analysis. I'm recording this on a very cold, rainy Friday morning, and there's something in the air. So my Kaltura was not working today, so I figured no problem, I'll go over and record this thing in Zoom. And then when I went over to Zoom this morning, I've noticed that my camera's not working. So definitely something in the air on this rainy day. So our purpose here is to review the homework from Chapter 6, and some of this feedback will be especially helpful to you for the last question on the midterm, which I know you're still working on and you're going to get to me by Saturday. So let's go through the overall feedback. At this point, you've all received your individual feedback and your individual scores on the discussion questions and also on the exercises and problem. General feedback grades on the discussion were quite good. Average grade 92%, and slight uptick on the assignments 84%. So anytime you're above B, which is generally good, I'd like to see that at 90, but 84 is not all that bad. And some of these were a bit tricky. A couple of things, and if anyone sends me an assignment and they post it and it's got a black line in the middle of it, I've been saying that for a couple of weeks, I'm sending it back. You may be a nice person, you may work hard, but if you give me a homework assignment that's got black lines on it, I'm sending it back. If it makes it difficult for me to grade, it's a grade. I've talked about this now for a couple of weeks, so check what you posted, and if it's got a black line, I'm sending it back. Maybe you need to talk to the IT department. It's something to do with your cutting and pasting, but that needs to be corrected next time. So my tolerance for homework with black lines through it has just ended. Please make sure that you answer all the questions. That's why I do the little homework briefing for you. For each question, each homework assignment, I tell you exactly the questions I'd like you to answer. And a number of you didn't answer all the questions. And again, you can't get full credit when you don't answer all the questions. And you can't tell me all that you know if you don't answer all the questions. So please remember to answer all the questions. Answer the questions in the order they are posed. So it got very tricky to mark some of the stuff because you guys were all over the place in terms of the sequence that you followed. So please answer the questions in the order that I posed them in the homework briefing. And the homework briefing is at times more specific than the text problem because some of the times these things in the text, it's a little bit fuzzy exactly what they're looking for. So I try to make it more precise. So when in doubt, just answer the questions that I've given you for each assignment in the briefing in the order that they are posed. When you get into detailed discussions about ratios and stuff like that, some of you had some very long essays, and you'd go from discussing current ratio to inventory on hand ratio, and there was no place to breathe and kind of reflect on what you were saying. So please leave space between your detailed discussion. When I bring up the homework solutions, you'll see what I mean here. And one short sentence does not constitute a discussion. So for each of these assignments, you're generally asked to do something, and then you're asked to reflect on it and tell you what your analysis shows. So just a short sentence is not a discussion. Again, take a look at the solutions that I'll bring up in a moment. You'll get a better understanding what I'm talking about and compare what you posted to what I put in the solution. So that's the general feedback. As far as discussion question 6.5, this had to do with earnings management and inventory valuation. So we know that managing earnings is when we artificially inflate earnings or we artificially depress earnings by doing things with the, with our accounting methods. And here it had to do with inventory valuation. So there are a couple of different ways that the company can manipulate earnings. They can increase earnings. They can go and they can change their inventory methods. So if prices are rising, they can change from LIFO to FIFO. We know that FIFO will give her a higher ending inventory and then a higher net income. So that would be an example. And we know companies that have LIFO inventory have layers of inventory. Remember, because your inventory is at your oldest possible costs, and they got these old costs. And if they sell those off, they can charge those low costs off against revenue on the income statement. So those are two ways that management could manipulate earnings, and they do that here. But when you got into the discussion here, you needed to mention the impact of rising prices. So your assumptions about the differences between LIFO and FIFO, the normal assumption is that if prices are rising, FIFO will give her the highest ending inventory and the higher net income. Well, in times of declining prices, that's just the opposite. So you needed to identify in your solution there the impact of rising prices. Using LIFO by itself is not an example of earnings management. So it's generally accepted accounting principle says you can use LIFO. So the very fact that a company uses LIFO, that wouldn't be an example of what I would call earnings management, where management manipulates the financial statements. You needed to answer all the questions, and there were 2 questions that a couple of you didn't answer. So when might changing from LIFO to FIFO not suggest earnings management? Well, if the prices are declining, then switching to FIFO would not be earnings manipulation, because switching to FIFO at times of declining prices would actually give you lower net income. And as far as liquidations, why might LIFO liquidations not suggest earnings? Well, if a company has a surge in demand, or if a company is closing down a division, those would be both examples where inventory is liquidated, but it's not actually and earnings are affected, but that's not actually management artificially manipulating earnings. So please make sure in all these, whether it's a discussion question or it's an exercise of problem, that you do answer all the questions. So a couple of you just didn't answer those last 2 questions. Good discussions this week, quite a few over there. Nylene, Sarah, Sabine, Marcy, Vladdy, Leo. So keep up the good work. And again, if you're ever confused of what a good discussion with your colleagues is, take a look at these examples from this week. Exercise 614. I know you'll see this again on the exam. I think it's on question 10, so please pay special attention to this. So you're going to be calculating LIFO inventory values, and you had to calculate them under the periodic method, and you had to calculate them under perpetual method for both 2018 and 2019. So for the periodic, this is very simple. You don't have to restate everything after each purchase and each sale. So just take a look. If you got fuzzy on this one, just take a look at slide 4. It's very simple. You simply take the beginning inventory, add all the purchases, figure out what your ending inventory is, and you're done. And so under LIFO, you're just going to take the your ending inventory is going to be made up of your oldest possible costs. So that one was pretty simple. Take a look at slide 4 if you were confused on that one. The perpetual is far more complex. So what you literally need to do is you have to keep track of each purchase and each sale. And every time you have a sale of merchandise, you have to figure out of what inventory pool it comes out of. So take a look at exhibit 6.3 and 6.4 on page 231, and you'll see exactly how that should have worked. And again, pay particular attention to this one and those 2 exhibits when you do question 10 on the midterm. Exercise 616, you were taking FIFO and you were comparing it to LIFO when you were computing ratios. So it said basically which company is better investment and why. So the only difference really between these 2 companies is one used FIFO and one uses LIFO. So when they asked you which company was better off and why, so X looks better on return on sales, and that's not current, it's current ratio. So their return on sales look better, their current ratio look better. But Z, on the other hand, had a higher inventory turnover and lower inventory on hand. So you could actually make a case for both X being a better company and Z being a better company. But what you needed to identify in your solution here is that it was basically the inventory selection method, one using FIFO, one using LIFO. Those both had a significant impact on the ratios. 620, so here you've got the LIFO reserve, and here's where a few of you, I don't know quite what happened, but some of the questions you didn't answer, and some of them you did in a different order. This will come into play. Some of this stuff comes into play again in question 10 on the midterm. So what you needed to do to get full credit is you had to calculate the change in the inventory reserve between LIFO and FIFO. You had to figure out what the cost of goods sold would have been if they had been restated for a FIFO. You had to figure out what the ending inventory would be for FIFO. You had to get the net income before tax restated for FIFO. You had to get net income under LIFO, and you had to get the net income restated for FIFO. So you'll see this in the solution, but to get full credit, you needed to do all these calculations. C, exhibit 6.4 on page 241. So that's an exhibit 241. I'm going there. 241. Yeah, that's actually review problem. So that was review problem, little typo there. Review problem 6.4 on page 241. That would be helpful to you in terms of if you struggled with that particular one. And you should have in your solution mentioned the LIFO conformity rule. So whenever we decide, make a decision in terms of, well, what's the best approach to go? And if we're comparing LIFO to FIFO and you're saying, well, maybe we should switch, remember that the LIFO conformity rule says that you got to use the same for tax that you use for financial statement purposes. And once you make that switch, you're limited in terms of the next time you can make that switch. So full answer there should have referenced the LIFO conformity rule. 623, the last one here. So we're calculating the value of ending inventory and cost of goods sold. Here we're using the periodic method. So we just got to take a look at make an assumption about the flow of the costs. We don't have to calculate the change in inventory and the cost of goods sold after each transaction. So most of you were able to get the cost of goods sold under the periodic method, but you kind of blew it with the net realizable value. So what we need to do is we need to get the cost of goods sold, and then we got to get we have to calculate the inventory. But the lower cost of market rule says get your ending inventory under either LIFO, FIFO, and weighted average, compare it to the net realizable value, and take the lower of the two. So I think what we had in this particular case was the net realizable value was actually lower than the FIFO inventory. So if that was the case, then you would have used the lower cost of market. You needed to answer the question, which method should they select when reporting to the stockholders? And again, you should have put into your solution here the LIFO conformity rule, which says what you use for tax, you must use for financial statement purposes. Right, so there's kind of a high-level overview. And let me see now if I can start sharing again. Let me call up the detailed solutions here. Okay, so here we are. So here's 614. So here under the periodic method for LIFO, what you needed to do is you needed to calculate both the ending inventory and the cost of goods sold. Now, this is periodic, which means you don't have to restate everything after each purchase and after each sale. So these were your purchases. These were your sales. Remember, FIFO means first in, first out. So we're going to, LIFO rather means last in, first out. Sorry, slip of the tongue. LIFO means last in, first out. So when you go ahead and cost everything out, basically you're going to make the assumption that the ending inventory is made up of your oldest possible costs. So you had 320 units. You sold 250, which means you had 70 units left. Your oldest possible cost is $12. So your costs here, you basically go in reverse order. So you sold 250 units. So you would have had 100 units at 15, and you would have had 150 units at 12. Since you had 220 of those units in your first purchase, that means you had 70 units that were left over. So your ending inventory is 840. Your cost of goods sold is 3,300. With regard to 2019, a number of you lost your way here, I think, because you forgot about the ending inventory that we had from 2018. So here are my purchases. Here are my sales. Okay, and remember, with your inventory is going to be made up of your oldest possible cost. So you had 70 units, and 70 plus 70, that's 140. So you had 240 units. You sold 170. So you had 70 units left over at your oldest possible cost, which would have been 12. So there's your ending inventory of 840. There's your cost of goods sold. So this is the one where I referred you to slide 4. So that was periodic. So periodic, we don't have to recompute everything after each purchase and each sale. But now we got perpetual. Okay, so here's your first purchase, you 220 at 12. And then you sold 120. So you got the 120 at $12 a unit, which means you got 100 left in stock. Then you purchased another 100. And then you sold 130. And remember, when you sell these things, you're doing last in, first out. So the last cost that you would have had available here would have been 100 units at 15. And then you still need another 30, so you got to go back and take 30 units at 12. And for 2019, here are your purchases. So you purchased these 70 units at 16, and you sold 80 units. So you had 70 units at 16. That wipes out that pool. Then you have to go back to your inventory left over from the previous year of 10. Okay, so now there's only 60 of those units left at that price of $12. Then you purchase another 100, and then you sold 90. So the 90 that you sold are going to come out of this pool. So there's my cost of goods sold. And now I've got 70 units in inventory. So that's 60 units back at the old leftover from last year at 12 and 10 units at $18. Okay, for some of you, I didn't really take credit off here, but when you needed to show actually what the ending inventory was. So some of you just had a little 720 and 180, you should have totaled those up to 90. So there's a comparison between the two. And as I said, when you get to problem 10 on the midterm, please pay special attention to the solutions to this problem. All right, let's take a look at now exercise 620. And you were asked to compute very specific things. So you had to take the change in the inventory reserve. So they gave you the inventory reserve for 2 years. You had to get the change in it. So it had been 171.5. It went down to 149.8. There's my change in the inventory reserve. So if I want to restate cost of goods sold, what I would do for FIFO, I would take the cost of goods sold on the LIFO, subtract out the change in the inventory reserve. So there's my cost of goods sold under FIFO. And the ending inventory restated for FIFO would have simply been the ending inventory under LIFO plus the inventory reserve for that year. And that's how I got the 355. And the net income restated for FIFO. Okay, so here was my net income under LIFO. And I've got to add that. This is before tax, so I just got to add in that, the change in the inventory reserve. So the net income before tax restated for FIFO is 221.8. And now the net income for LIFO, under LIFO. So if this is the net income pre-tax for LIFO, then what I need to do is I need to figure out what the tax was, and the tax was 20%. So there's my net income under LIFO. And then my net income for FIFO, okay? So there was the restated for FIFO would be the 221, because that was the net income before tax for FIFO, reduced by the income taxes, and that gives me 177.44. So again, you're going to see these things are going to appear again. Some of these calculations you're going to see again in your last midterm questions. So you may want to pay special time on reviewing this one. All right, and then as far as the discussion here, here's what I mean about, a discussion. For your discussion, it shouldn't just be one line. Right? So you want to talk about, they say which inventory is best. You got to have some criteria. So net income under FIFO is higher than inventory on the LIFO, in this case by about 11%. And if Herman elects to use FIFO for higher net income, it's precluded from using LIFO for tax purposes. And so there's always trade-offs involved in terms of your selection method of an inventory method. And then the last one here, 623. So you had to calculate cost of goods sold, but this is under the periodic method. So under first in, first out, you've got the total amount of tons that we had here going to 623. So you had a total number of tons was 2,200, and you sold 1,700 of those. So you had $500 units left in inventory here. So when they're first in, first out, you're going to take the units and you're going to charge them off the cost of goods sold in the order that they came in. And you're going to stop when you reach 1,700. So your FIFO cost of goods sold is 59,100. And LIFO, you're going to start at the bottom and work your way up. So your most recent cost is 43, and then 30, and then 33, and you're going to stop when you hit 1,700. So interesting, price flow here. You had prices started out at 38, went down to 35, 33, 30, and then they spiked up to 43. So you've got kind of an uneven pattern here in the pattern of prices. So you had prices that were declining for most of the year, but then they spiked at the end of the year, which kind of gave you some kind of funky results here. If the prices had actually been declining consistently throughout the year, then FIFO would have actually given you the higher cost of goods sold. But given the spike at the end of the year, you actually had a larger cost of goods sold on the LIFO. To get the weighted average cost of goods sold, you take the total cost of all the inventory, which is the take the total cost of the inventory, divide by the 2200, and that's going to give you the 35.75. Okay, and then you multiply that by 1700. So there's my cost of goods sold there is 60,775. And then as far as the ending inventory, they told you that the net realizable value of the inventory, that it was priced at 38.50. So if you multiply that by 500 tons, that's your net realizable value of the inventory. So what you need to do is calculate the inventory under either FIFO, LIFO weighted average. So here's the ending inventory, and to get full credit on this problem, of course, you needed to show cost of goods sold, you needed to show ending inventory. So FIFO ending inventory, you had 500 units. So you had your inventory is going to be made up of your most recent costs. So you got 350 units at 43, and you got 150 units at 30. That gave you 19,550. For LIFO, your inventory is going to be made up of your oldest cost, 500 units. That would be $38. And then weighted average, it's simply 500 units times 35.75. But now when you actually consider the net realizable value, notice the net realizable value of 19,250 is less than the FIFO valuation. So under the lower cost of market net realizable value here, what you end up showing on the balance sheet for FIFO is not the 19,550, you're going to show 19,250. And then as far as the discussion, you've got to have criteria, and you can talk about the change in prices here. And the company needs to consider not only the current results, but the future results. And remember, whatever decision is making, they've got to consider the LIFO conformity rule or the LIFO compliance rule. Okay, so I hope you found that discussion useful and that review useful. And we will I'll look forward to grading your midterms and look forward to seeing you again soon. Okay, be well and enjoy the weekend and good luck on the midterm. Hasta luego, au revoir.